Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Tuesday, December 6th, and then we'll see how things are looking for Wednesday, December 7th. And we really needed an up day on Tuesday, and we just did not get it. In fact, we saw a continuation of the decline that happened on Monday, and that is really switching things back to negative. This positive backdrop that we've been looking at and seeing based on our charts, it's pretty much going away unless we see some really solid buying on Wednesday. We're going to lose it. And we not only worked off the short-term overbought and somewhat intermediate-term overbought condition, some of those indicators have actually gone extreme negative, at least in the short term, for being overbought or oversold now. So things have really shifted, and it's not looking positive at the present time. So right at the open, we did have a lower open. Again, that's been what's happening so far this week. We declined below S1 at 39.71. We went all the way down to S2 at 39.44. As the day went on, we actually dropped below S2. We never did get close to S3. The way these are calculated, R3 and S3 are so far away that it really takes something big for them to even come into the picture. So they weren't relevant in Tuesday's session. We ended up finding support at 39.18. We closed slightly below S2, so there was a bit of a bounce going into the close. We were down 1.44%, and we were down over about 1.75% on Monday, if I remember correctly. So we're looking at about a 3% decline in 2 days, and that's not positive at all. Volume still continues to be below average, and the technicals, as I said, they're turning more negative. I have a number of charts to show you because we're seeing a real shift in our charts from positive to negative. But while that's happening, we're kind of in a trendless environment according to our ADX. And this is due to growth concerns right now, with the economy still doing okay, but showing some weakness. And the employment situation is still really strong. That could lead to more inflation. Now it's kind of shifting over to corporate earnings. And is this really going to have an impact on the earnings per share? And if that's true, then that's ultimately what drives stock prices. And when the earnings per share is in jeopardy, we have a tendency to see stocks going down. At least that's what it seemed like in Tuesday's session, but that could quickly come and go like the other things that the market likes to fixate on. And we didn't get any Fed speak on Tuesday, but we could always get some that impacts the market. Here's the intraday chart, where we had a lower open. There wasn't a real big gap, but we quickly went down after the open below S1 and then eventually all the way down to S2. This tried to hold up as support, but we broke through that, went all the way down to 39.18 before staging a late day comeback. So we did close off of the low. What are some comments that we can take from this? The Powell speech gains thinking that the Fed had finally pivoted. They've been given back now. So the big run-ups that we saw are not there any longer. And so we're having to ask this question now instead of, has the Fed actually done a pivot? I'm changing that question a little bit to, is this another false Fed pivot? Because the market would not be doing what it's doing if it still believed in the Fed pivot. The US dollar went up, and that provided some headwinds for stocks, but interest rates fell, which has lately been giving support to stocks. Didn't happen in Tuesday's session. Many of the charts have turned negative, and the positive backdrop, it seems to be gone now. We do have, in the short term, a couple of extreme negative indicators. The Stochk RSI, which was already negative after yesterday's session, and the Williams %R. These are really touchy, and they move pretty quickly, and they're already into oversold territory. We still have the BPI being extreme positive. It fell, and I have a chart to show you, but it's still above what usually is a topping value currently. And we still have all of our yield curves that are inverted. And sentiment, it really hasn't budged all that much. We're coming down. We're not even back to neutral yet. And it's still positive, and we can kind of go with that, but the market is falling, and you're going to have fear starting to creep back in, especially if we continue to go lower from here. The trade balance was the only economic report that came out. It was down, or it came in at a deficit of 78.2 billion, a little bit more than expected at 77.2 billion, and more than last time at 74.1 billion. So we're buying more stuff than what we're selling to other countries right now. And you could take that as either positive or negative, but it could also be inflationary. In our trend, it's turning negative. The green line is coming back down slightly under the red line, and the ADX itself is now below 20 as these two lines are close to each other, and I'll show you that. Our bias is now clearly negative. I was kind of hoping maybe it would hang in there as well as our momentum, but they're both looking a lot more negative right now. Here's our chart. Are we starting to follow this pattern now from 2006 to 2008? This is a couple days old now, where we've been coming back down. We're below 4,000, way over here on the left. You can see that, and starting to come down. Are we going to follow the same pattern that happened during the great financial crisis? Right now, you could make a case for that. A couple of days ago, it was looking like, no, we might break out of what this chart is telling us. Now it looks like we may be matching what this chart is telling us. And then the VIX, which went up slightly, but it's just getting back above 20 right now. We need to see it up to 60, 70, 80 or so before we look at the end of some kind of a washout climax actually happening. But the VIX is going up a bit here. Here's our ADX showing that we're down below 20. We're below the moving average. The green line is coming down. The red line's coming up. So that is turning negative. But while we're below 20, that means we're in a trendless environment. And we may stay here for a few days, or we might just pick up and keep going to the downside. We're going to have to see some real buying coming in if we're going to get that positive backdrop available as something to latch onto, because it's pretty much gone right now. And then I have a number of charts to show you. The stochastics in the short term, they're getting extreme negative, really turning negative in intermediate term, and long term, still extreme positive, but starting to come down. And this, when taken all together, I tend to treat this as a short-term indicator. But the very short term is showing that we're getting extreme negative. Also, our oscillators are starting to show some weakness. The PMO that we do a lot of studies on, it is starting to roll over. It hasn't crossed yet, but if you look down here, we've already crossed based on price and volume, and these tend to lead what the PMO is doing. Here is all of our oscillators. The slope is turned down. The MACD is starting to go negative. We're seeing the KST starting to roll over. The tricks, it's still hanging in there, but this is a slower oscillator. The PMOs I just talked about is starting to go down, but hasn't quite crossed yet. And the TSI, the Trend Strength Index, that is also starting to turn more negative. Where just a couple of days ago, these were holding up quite well. They're not doing that right now. Another indicator is our vortex, and we had been pretty strong here with the green line well above the red line that was declining. Well, we're seeing the red line crossing back above the green line now. And then we have our Elder's Impulse system. It has switched to a red bar after being neutral for the last couple of sessions. And then this is another one, and I take this as kind of a big one. This is our SAR, stop and reverse system. When the dots are below, that's positive. When there's a dot above, that's negative. And after Tuesday, we had a dot switch. And this indicator takes a lot to switch directions. That's why it can be very frustrating if you're going with this indicator, because you might see some really hefty drawdowns that could lead to some really hefty losses if you actually close out any positions. Well, to see this dot on the top is considered pretty negative now. We're also seeing in some of our different charts where we measure price action, the KEGI chart, this is turned to red. That's negative, where it had been black for quite a while. And the point and figure chart, we drew in 3 circles here where it had been drawing in X's and at least staying where it was in more of a positive slant. Well, there's no signal that's being generated, but these 3 circles mean that we're turning more negative. And our 3-line break is put in a black candle. So that's, after being positive, has turned back to negative. And here's the BPI. It's starting to come down. It's still extreme positive, but with the down day, it's starting to roll over. And this is what I addressed in yesterday's video, where we're getting pretty toppy right now. And look at what the market has done after we've been able to get to these levels with the BPI. Again, the BPI takes all of the stocks in the S&P 500 and looks at them as point and figure charts. And if they're going up, those are called buy signals. If the point and figure charts are showing some improvement, if they're showing weakness or sell zeros in there, then the BPI comes down. So it can give us a real good insight into what's happening inside of the S&P 500. And then here's the longer chart that I spent a little bit of time on in yesterday's video, where we saw a lot of negative divergences when the market was going up. We've seen some positive divergences, which were ignored when we were going down. And you can just, if you want to, pause this and look at this chart and then compare when we topped out, then what happened after with the S&P 500. And a lot of times this marked a top of some sort. And we're starting to come down now after giving an extreme positive reading. So does this mean we have topped out and will continue to fall? Then I showed this yesterday where the triple exponential moving average, it had been providing support. Well, we broke that, and now we're down to the 50-period double exponential moving average, which is now providing support. But we have to ask, will that support finally give way? And then eventually, will this red line come back and cross below the blue line? And our summation index is going lower based on price and volume. We saw a little bit of a lead with this based on volume before we saw price really start to go down. The equity put call ratio went up slightly, but is not spiking right now on the daily chart. And it's pretty much flat, but it's still declining overall on the 5 period after giving us a really extreme reading during the week of Thanksgiving. Here's our daily chart. We came right up to this trend line and now have been bouncing down. We did drop below this pivot. That's more negative. We lost the 200-day moving average, so we're well below that now. We're still above the 50-period moving average, but can that hold? Will that provide support? And then down at the bottom, you see where volume is still below average. Here's our moving average tree. We just got done losing the 200-day moving averages. Now we've lost the 20, and those are more short-term. We're coming down to the 100 moving average, and we closed above that, even though we fell below it slightly. That is providing support right now. If we continue to fall, we may fall below that and then start really heading lower than that, even down to the 50-period moving averages. So we needed things to look better for that positive backdrop to stay there, but we're just not seeing that in our charts. And our new highs, new lows, they're starting to break down. With our 5 period turning down, our 10 period is more flat. But if we see continued weakness here, we're going to see an expansion of the new lows. The Swindling Trading Oscillator, and this kind of gave us a heads up. Even when the market really spiked up after the speech, it still went down that day and has been going down ever since. And so this actually was a leading indicator for us. The unfortunate thing is we don't really know at the time. We just need to be aware of this, because sometimes this gives us false signals. Other times it's like right on with what is happening and actually gives us a little bit of advanced warning. And our fib levels, we're coming down here. This is the 39.10 level or so, where we closed at 39.41. We got down to 39.18 in the day's session before bouncing back up. But this is another fib level just to be aware of if we keep going down. And then this is longer term, where we're back down into no man's land after giving up support with this solid blue line. Oil continues to fall right now. The EU, as I said yesterday, has put in a potential price cap when they're selling oil to Russia at $60 per barrel. But then at the same time, Saudi Arabia came out and said, no, we're going to continue to produce less, which that should push prices up. Well, maybe the markets are starting to readjust to that 60 level currently. Just a speculation. So what's our outlook? The technicals, they're turning negative. All the positive things that we were seeing are pretty much gone now. We have the MBA Mortgage Applications Index. We get that every week. We get revised third quarter productivity as well as unit labor costs, consumer credit, and none of these in and of themselves are usually all that big. We kind of take them as a whole and then look at them in the larger picture of what's happening economically. Got the whole list of geopolitical events. I have taken the midterm election off of here because that Georgia runoff has now happened. But the markets still are fixated on this inflation and interest rate, which is producing growth concerns. Oil is kind of starting to act a little strange right now. And then if we get any kind of Fed speak. So what are our scenario? I'm not going with the down scenario yet because we are trendless, but the technicals are turning negative and they've got the whole list of headwinds here. And we can't really go with the positive scenario. We had to take that off of the table with our different scenarios and sector rotation. Those are breaking down. Our positive setups, which were looking good just a couple of days ago, they're now showing some weakness. And then our technicals, as I keep saying, have turned more negative. We're losing moving averages now, pivot levels and fib retracements. And it's just shifting from more positive into negative. Now, we could always come back. Anything can always happen. But at the same time, to be on the heels of what potentially was taken as a Fed pivot, and then to give all that back in less than a week is not really all that positive. But for right now, we're going with the sideways or neutral trend because the ADX is weakening, it's below 20, and it's turning negative. So our conclusion, the S&P, yeah, it's turning negative. It's not quite full-blown negative yet, but it's getting there. And the short term is negative and slightly oversold. The couple of charts that I showed you. Intermediate term, it's switching back negative, not really showing anything extreme negative currently. And long term, which was looking to improve, but we're starting to camp underneath the 200-day simple moving average. So that's shifting things back to even more negative after it had been showing some improvement. So thank you. Have a really, really good Wednesday. And this will be the only video that I post today. So have a great week, and I'll talk to you in the next video.